Good morning, Kayode, and thanks so much for your time. Well, the market seeing a very pressurized week this week, 2 consecutive down days. Run us through what you're making of some of the activity where surely profit taking as a reason has started to wane away.
Yes, good morning, Alishia. I think what we're seeing is, as you say, the market had quite a good growth spurt last week, and there is an element of profit taking. I think there's also an element of the internal squabbles within the Nigerian Stock Exchange themselves, which is depressing investor confidence in the market as well. So I think those two are the issues that are really dragging the market down at the moment.
Well, let's take a look at some of those squabbles taking place within the NSE itself. What exactly is playing out, and what kind of outcome is the market ultimately waiting for?
Well, what we're seeing right now is a battle for the succession of who takes over the NSE. The President Director General is due to retire by the end of this year, and the Securities and Exchange Commission, which is the regulator, is trying to have a big say, which it should, in who the successor should be. And there's an interplay of forces within the NSE about what the succession battle. And what we're seeing is allegations and counter-allegations coming out, which is not good for the confidence in the market. And I think the Securities and Exchange Commission has to take a firm line and take a firm grip of the situation.
In the meantime, we've got results keeping investors busy as they analyze and unpack those numbers out of the banking sector. Fidelity Bank seeing a PAT up and gross profits down in line with expectations. But there is some concern when it comes to this bank specifically, in that it isn't showing signs of growing its other income. Run us through your analysis of the numbers and just how much of a concern that fact alone is for you right now.
I think Fidelity's numbers, when you look at it, I mean, they only provided an outline to the stock exchange. So when the full detail comes out, proper analysis can be done. But for what we've seen so far, looking at the market, is that gross earnings are down, but the profits are up. And we're not sure if those the growth in those profits are through release of provisions, because there was heavy provision in the second half of last year. And we're seeing a lot of the banks are writing those back. Fidelity in itself is a niche player in the market, trying to focus on the SME sector. But we see Fidelity, especially be an active part in the current M&A process ongoing with CBN, to try and take over one of the rescued banks, to try and grow its distribution network and take it to the next level.
Let's take a look at that, because this is one of the banks that has said that it has plans that it may pursue acquisition moving forward, because growing organically at this stage of the game is difficult. I mean, if you look at the muscle that this bank is building up, what are your prospects for this bank moving forward? And does it have the capital, or the strong enough balance sheet to go down this route?
I think if it's looking at merging one of the smaller rescued banks, I think it has an opportunity and possibly the capital to push that forward. I think Fidelity might also try and go towards the IFC, because the IFC have mentioned that they have funds available to good institutions to help them in the merger and acquisition process. So I think Fidelity being one of those banks approaching the IFC to help fund any such acquisition. I think Fidelity, the bank, has to do an M&A deal. Because at the moment, as you said, growing organically is not really there. It needs to move to the next level and increase its distribution more widespread. And the fastest and more efficient way of doing that will be through an M&A deal. I think that's what they're aiming for.
While that may well be needed, I mean, some have raised concern that it will be really difficult to extract value out of a deal like this, because the biggest risk when it comes to having to merge or acquire any of the troubled banks is that you are sitting with toxic assets. So run us through that and the way you're reading that situation, and abilities to effect turnarounds that are going to be effective in the short term.
Yeah, any investor involved in the rescue banks is telling the advisors and CBN that, look, you have to take the toxic assets off our books. So you have to get back the capital level to zero. Then we can look at investing new capital, take it back to regulatory capital. Now, how those toxic loans are going to be managed by AMCON and CBN is the key issue, because they have to be priced. There's no real pricing mechanism that AMCON has released so far. And AMCON have said that they're only going to take loans that are collateralized. And we know from CBN pronouncements in the last few months that not all those toxic loans have collateral. So what's going to happen to the non-collateralized loans? So I think there's a bit of uncertainty about how AMCON is going to treat those toxic debts. But I think for any CP to any deal from any investor is going to be that at least the capital position must be at zero. So how that's going to be addressed. I think then you have to look at the issue of funding for AMCON, because by CBN's figures, about $14 billion worth of toxic loans that AMCON has to take on. Now, does AMCON have the funding capability to do that? And even if it does, who's going to wear any potential losses if not all those loans are recovered? The Nigerian government? I think that's a debate that has to be had in the public domain. Well,
while those debates rage and are expected to rage for a while yet, we've got the Nigerian bottling company having just reported a 51% slump in its first half pre-tax profit. The company, of course, holds that Coca Cola franchise over in Nigeria. Overall impressions of those numbers that have come through there?
They're very worrying. Anyone that shows a 40+% drop it's also very worrying figures. Unfortunately, they only gave headline figures, so there's no real background to why this has happened. And looking at the economy on a whole, those figures are quite worrying. But I think once they give a full breakdown of the figures, then proper analysis can be done as to why.
Well, of course, the detail is lacking, but let's take a look at some of the possible factors that could be impacting on its growth at this stage, Kayode, because we know that this is a manufacturer. It relies very heavily on power for one. So one could extrapolate that could be one of the reasons amongst a lot.
Yeah, yes. If one is just looking at NBC as a manufacturer and its market, the two main areas you focus on, as you've mentioned, one of them, which is energy, and in terms of power and whether they've had sustainable power to their factories to maintain production. I think the second area you're going to look at is distribution. NBC as a distributor relies on the distributors getting credit from it, or credit either from NBC or from the banks to buy their products. Now, with the credit crunch, I think companies like NBC have cut down on the credits they give to their suppliers. And the suppliers then find that to try and get alternative credit lines from the banks has been difficult. So you could see that suppliers are actually buying less inventory from NBC because of that. So those are the two factors I would look for in the figures.
Because, as you say, the concern is the fact that we are seeing some growth in the real economy, and other companies within that space reflective of that, Unilever amongst the lot. So run us through your overall sentiment around that food and beverages sector at the moment.
The food and beverage sector, they're obviously, at the moment, the figures are mixed, as you said. We have companies like Unilever that are showing quite impressive results. At flour mills that showed quite impressive results as well. I think what we're seeing is that those companies are very efficient in terms of their having stable power, access to cheap gas, because not all the manufacturing companies have access to a gas network, especially in the Lagos area. So those that have reliable, efficient power sources are seeing their production up and seeing their revenues being steady. I also think companies that rely more on credit from the supplier, people who buy products from them, are finding it difficult because one, the banks are not giving credit lines, especially in the first half of the year and this part of last year. They were not giving credit lines to the suppliers. So suppliers were buying less inventory off them. So they were building up inventory levels, which is affecting their bottom line. So I think in the food and beverages sector, you would see the more efficient manufacturers are coming to the top.
Let's hone in on Nigerian Breweries specifically. It gained 3.33% in yesterday's session and really working to boost that sector higher by the close. What's your view on Nigerian Breweries and how it compares to Guinness at this stage of the game?
Nigerian Breweries has always been one of the top stock picks in the whole Nigerian Stock Exchange for the last few years. It's been a good performer, and really, because the Nigerian beverages market, especially the alcoholic beverages, is one of the biggest in the world. I mean, for example, Nigeria has the biggest Guinness factory in the world outside of Dublin. And so the sector is seen as growing, especially with elections coming up and more cash being in the system, so more disposable income. I think Nigerian Breweries on the whole has made its distribution network more efficient. They've been working on that in 2009, and we're seeing that in the improved efficiency. And going forward, I think, although they're seeing increased competition from the likes of SAB Miller, who are trying to move into the market and have bought, I think, 2 small breweries in Nigeria to get a foothold, I think Nigerian Breweries, with the stranglehold and the brands it has already in a stable, is going to be in a poor position. I think compared to Guinness, Guinness has had some certain issues in terms of trying to sort out its financial position and trying to maintain its market share. I mean, the main brand, Guinness Stout, is a leading brand in Nigeria, but they're trying to diversify to try and bring other brands in, and really the progress will be on the success in doing that.
Well, let's look to the day ahead, Kayode. Anything that you've got specifically got your eye on as we progress through today's trading session?
Really, as I've said over previous months, I'm looking at the ICT section at the moment, especially with elections coming forward. Mm-hmm. We have the INEC, we have announced looking for close to $700–800 million for elections. A lot of that's going to be spent on ICT products. So we're looking at local ICT companies who might be able to get a share of that, and we're seeing potential growth in them in the second half of the year. Also looking at potential deregulation of the petroleum sector, especially with the problems and the allegations against the subsidy regime that's currently going. I say marketing companies, especially like Mobil's results, which are quite impressive. Mm-hmm. Although their revenues are down, they are showing more profits because they're more efficient, because they are finding that there's less time between, especially with the new sovereign debt notes the government's issuing, that there's less time in the payments of the subsidies to them, and so they're incurring less bank debt and less bank interest charges, and that's making them more efficient. And so I think this year, petroleum marketing companies will do quite well.
And just in terms of that exposure to the ICT sector, I mean, how would you be increasing your exposure on that front? Because we know when it comes to the telecoms, it's Starcoms there that stands in the spotlight. Are there other avenues that you'd be exploring there?
I think in terms of the ICT sector, we're looking at companies like possibly Omatech and Charms, which are really not telecoms companies, but they provide the backbone. For example, Charms normally has contracts with INEC for data in terms of national identity card, and also in terms of data equipment for capturing voter registration figures and other things for INEC. So companies like that, rather than the telecoms companies, I think, but there are a few of them still which are listed, which I think might see potential contracts from the INEC.